All right. Good morning, everybody. So Japan did a really good job of signaling in advance that they were going to pivot. And so we got the pivot and we didn't see an extraordinary move yet out of the market other than US dollar Japan getting above that 150 mark. We are looking at a bit of a oddity between how the dollar looks, or the dollar index, and the 10-year. So still need to kind of let that play out a little bit. Hong Kong is down the most at 1.25. So your China ADRs are going to take a lump. Uh, Baba, Baidu, JD, all those. The NASDAQ down near 0.75%. S&P just less than a half. The Russell right below that. And the Dow down 0.25. Japan was up a little bit more. It's kind of fluctuating around the zero mark. It still continues to be a hurry up and wait week. But like we talked about yesterday, I wouldn't expect to see the market just sit tight and wait for the Fed like we've seen in the past. Yesterday, we got kind of close to that weekly expected move on the ES, which if you had tried to run a 0-day iron condor yesterday thinking, it's FOMC week, we should stay range bound, you'd have felt that. We're going to get some housing data today. We've got additional auctions today. And really, we're going to just want to sit around, see what the market has to say about Japan as more places open up, and prepare for the FOMC this week. They're now that the pivot has been announced, we're seeing more analysts come out with some hypothetical scenarios on what's going to happen to the market now that we've got this pivot. It's worth looking around and seeing what else you can find. I know FX Street has done a number of posts about this, so that'd be a good place to look. For some reason, I thought the 20-year was tomorrow. It looks like we're going to get the 20-year today at 1 o'clock as well. Yeah. FX Street has it for the 20th, and Finance Juice has it for the 19th. Either way, we know we have auctions today. If it happens to be the 20-year or not, just want to watch the clock. Now we see that Japan's got a holiday on the 20th. There's a website called tradinghours.com, and it's a free website that will tell you when markets open and when they close around the world. And it'll also tell you if those markets are to be closed for a holiday or anything like that. So it's a really good website to go to, especially if you get in on one of these mornings and the volume isn't there, right? If the volume's really light and there's no economic reason for the volume to be light, and you're trying to figure out like why is nobody participating? It's usually because there's a market closed around the world. So you just want to go check that out, right? And that's tradinghours.com is a good place to go. Plus, it can get a little confusing, when we get time zone differences from daylight savings, and that can really throw everything off because some places don't change, right? Or they change at a different time. Looking at the ES this morning, we're really close to hitting that lower ADR. As a magnet, we're going to hit that. Like that's a done deal at this point. But after we hit that now, then what? It's a good start to consider. If we hit it this early in the day, then we can go hit the other side by the end of the day, which would put us closing near that 52.41 area, basically yesterday's high. It doesn't owe us a move like that, but statistically, that's the kind of moves we've seen, right? That usually when we get to the ADR half early in the day, this is kind of a captain obvious statement here, but if we get that low that early, we only have two choices, right? Here's the captain obvious part. We're either going to rebound there and go back up, hit the other side, or we're going to get aggressive and really break down from there and hit the other ADR line, the lower one at 51.62. So, gee, imagine that. Your choices are that we're going to V bottom and rally back up, or that we're going to continue to go lower. That's not much of a surprise at this point. We are below both pivot points, the daily and the weekly. Generally speaking, when we're above the weekly, we're bullish, and when we're below the weekly, we're bearish. If you ever wonder about the weekly pivot and whether or not it has context, look at all this price action Sunday night against this weekly pivot point. You can see that's the weekly pivot that we're talking about here. So we're there. At this point, it's a 50-50 coin toss on whether or not we continue to go through the ADR and get to the other one or not. There's no reason to guess or assume. If we break down below it, then we want to focus on extending that push to the next level. Some simple measurement tools that can help you on that trip to the downside. First, measure the Globex range. So our own Globex low to the Globex high, it's about 20 points-ish. So now beyond the ADR half, we've got 100% of the move measured at 51.86. Then we get into the 10-day moving average, also the previous week's close. That's a combo deal right there, right? That's Friday's close, and it's the 10-day moving average. So you've got to believe that that's a potential support zone. Now, we say the word potential because until we look back, we never know for sure if something is going to be support. The only thing that makes something support is liquidity. So watching the dome, using something like Jigsaw or Bookmap to see the orders that are sitting down there, we want to witness that liquidity on the dome to understand if it is going to be supportive or not. Cut through that, we got 51.78. Below that, we have 200% of the move, which gets us into the 3-day, or excuse me, the 3-week moving average. 51.70, basically. Down beyond that, we get to the full ADR, 51.62. So it's level by level by level, right? This does fit in with the narrative that we had yesterday of not waiting, not seeing the markets wait for FOMC, and instead seeing the markets actually make its moves. Tomorrow morning, when we come in, we'll expect to work through a sideways day into 2 o'clock for FOMC. But yesterday and today, that's not our expectations. The volume is normal. I'd say even a little high for an FOMC week. So we're not sitting, we're not seeing them sit out. They are in there actively engaged, and there's no market maker move, so they're not hedging. If we do begin to base here on that ADR full, then you'll want to move these measurements, right? If this starts to base or even just V bottom and begin heading in the other direction, bring your measurement down to that point so that you have your halfback mark. Call it 5,200. It's 5,204, but that whole zone would be an area of concern. But that's if this even V bottoms here or begins to base here. $10-day, 30-minute volume profile, nothing has changed here. And in fact, the TPO didn't move up yet. And now that we're back below that zone, I find it unlikely that it will move up there. Throughout the day today and getting into Wednesday, unless we break down into this below 5150, then we're going to lose this lower level. And so by tomorrow morning when we come in here, 5150 should be the new low of this profile. Like I said, unless we break below it today, which is possible, but we don't have a catalyst to take us down that sharply at this point. We are slowly beginning to develop the classic B shape. And we're going to watch this 5180 area for them to step in. You've seen the build up in volume here. The idea is that we could get down into this zone that already has a lot of volume, very likely could have a lot of unfinished business, and we could bring that point of control down here. We have a VPOC now over our head. This is yesterday's point of control. So if we begin working our way back up, 5225 is going to be a level of importance. Want to keep our eye on that spot. Unfinished business, right? That's where the greatest amount of volume took place. Think about it from your own situation. If you had got into a trade at 5225 yesterday and you find price back to that level today, what would you do? Right? It's kind of the idea. Just start with that general assumption. It's a place where the most trades happened. And if we get back to that spot, we expect to see trades happen again. So trading activity doesn't always equal support and resistance, but it's certainly going to be an area of interest. We want to pay attention when price gets to that level. Not really seeing a whole lot of discrepancy this morning yet between the TPO here in blue and the volume profile in green. It's a little elevated, not too much yet, but we can see that, time spent is still very narrow because of course we haven't spent a lot of time here. So we want to continue to watch this to see if it builds out 5294. Remember, there is a cog line at 5194 is what I should have said, not 52. 5194, but there is a cog line at 5192. COG, center of gravity. Yeah, no, I mean, you can Google it, but you're going to find John Euler's center of gravity or COG. I think whoever named those cog lines didn't know that John Euler had already came up with something. And that's where the discrepancy comes in. So yeah, no, not talking about John Euler's hog lines. So we're still 2.7% above the 10-week. We are on the decline. The blue line continues to rise. Everything that we talked about yesterday still holds true today. And we are now below the 10-day. It's been a while since we had that on the screen during the morning briefing. Usually we get down below that level later in the trading day, but we're below it this morning, really kind of interacting with it at this point. And it's worth noting throughout the entire year, really since this last good pullback in January, that we didn't stay below the 10 very long, right? We haven't even really gone below the 10 at any depth for a while now. Come back all the way to January. And remember, there was an FOMC and QRA between January 31st, February 1st, right in that time frame, right? So a pretty decent reason to see such a big move below the 10. Otherwise, we haven't had a lot of that this year. That's something to consider for will we V bottom today and go ripping back up to the other side and hit the other ADR, or will we base today and then turn around and run back up? Running back up, however, still seems to be the base case argument. So I mentioned it already. We got pretty close to the weekly expected move edge. We made it up to 52.40 and a half, and it's 52.47. We'll just call it 47 and a half. That's almost 5 points, right? Just really close to the entire week's move made on Monday. The gray line is where Friday ended and the new week began. So at this point, if we continue moving to the downside, we're just completely wiping out everything that happened yesterday. We're not negative at that point on the week. We're just right back to where we started. I mentioned it at the start, but we did get that move in US dollar Japan, and it made sense that we've seen a move in the Dixie at the same time. So we can see that strong run up. But we're already starting to see a little bit of a disconnect or divergence between the Dixie and the US dollar Japan. We definitely have some divergence between the 10-year and the Dixie. Generally speaking, these two work together. So if one's going up, we see the other go up. It's not guaranteed. They're not a teeter-totter. They're not connected at the hip, but that's generally what we see. And that's not what we had in that move last night. So Japan announced, we can see the big outsized bar and the big pop up from there. We see the big move also in the Dixie, kind of reciprocating that same time frame. But we don't really see any reaction out of the 10-year at this point. So want to keep our eye on the 10-year and the 2-year. Make sure they don't get out of control. Any sudden violent moves in there certainly should take precedent over anything else that you're looking at. And then keep an eye on the dollar. The idea with the dollar index is that we're going to see it basically get a reset. So we're looking for it to come back down at least to the start of the move. Right. And if we kind of back up to the Japan announcement, that was right here. So 11:30, that would be a kind of a gap fill concept. All right, Bitcoin's down 5.5% this morning. The FANGs are down, semiconductors, China ADRs through the KWeb, tech through XLK, gold, miners, and generically speaking, just growth is down. The VIX is up, the Dixie and Nat Gas. Not the kind of market moves we want to see. So with Bitcoin being down like this, we should see the proxies down as well. Mara, Hut, Hive, Riot, MSTR. Pot stocks are also down. And semiconductors. We want to watch semiconductors. We got a nice setup here for breaking down below Friday's low. There it goes right now. So get down below Friday's low. We can target this zone back here. Call it 212.50. China ADRs with this big gap down. Let's get below the half back and we'll see what we can get after that. That'd be 26. Now we can see a lot of defense above that 26 on this day right here, March 12th, and then March 15th. Both times there was a lot of defense along this low. There was trading in there that picked it right back up again. So we want to watch to see if we're going to get that same kind of defense. Remember, China's been throwing a lot of stimulus at its market, and we really haven't seen the follow through from all of that yet. I mean, sure, we're off the low, but it's been a rough start. Still a lot of work to be done, and there's still a lot of threat in that space. So let's see that defense. If it holds 26, then, there's a reconsideration of maybe a TRB setup and a run back up into 27.5. All right, so really not much of a surprise. Everything's down, and we're waiting on FOMC. So even on this sell-off, we're not expecting it to, get out of control. We're already trying to stabilize from the move down this morning. Went right to the ADR and stopped. And we've got our lower levels in place. So if we do continue to the downside, we've already covered what they're expected to be. If we do start to V bottom and move back the other direction, one of the things we're going to want to see is that we get some assistance from the fangs. Right, so we're going to want to see either the NY Fang index or just your homemade ETF. We want to see that group continue to move to the upside, or begin to move to the upside in this case. This is a homemade ETF, right? A little bit of weight to it. Apple, Microsoft, Google, Amazon, NVIDIA. There's always a lot of questions over this weight. I've done the weight, and I've seen a couple of different weights being used, and you do have to continue to update it when the market cap changes. And as uniquely exciting that might be, make you feel like you're really doing something special. And take a look at the way that this chart looks. And then this chart, this is just the straight up NY Fang. There's not much difference there. The other way, and the other thing to think about is, even if there was no weights on here at all, if you just put the names in there, what it would look like, right? Because again, it's not going to look very different. So if you don't have weights and you're thinking, oh man, I got to get it. Sure. I mean, I'll give it to you, but I guarantee you're not going to benefit from it. And it won't look any different if you don't use the weights, right? So there's no difference. It does feel good to use a fancy chart though, with all the weights. The thing is, this morning, the fangs are down. That's kind of the number one thing that we want to focus on. The fangs are down, but we're still holding these highs. So overall, we're still bullish. Put it on a weekly. We're still above the 10. We're kind of flirting with that 3-week, but we are still above the 10, and above the 10, we're still strong. And look at those moving averages fanned out like that. That is literally the textbook definition of strength and trend. So we're holding the highs. We kind of stalled out here a little bit, but we are still at those highs. It's still bullish in the big picture. For this morning, we're gapped down a little bit. And we still have this divergence with the S&P in orange and Taiwan exports in blue. So we still need to see this divergence play out a little bit. Something been keeping our eye on. And then the NASDAQ, here, the NASDAQ composite, not the NASDAQ 100. So the price candles are the NASDAQ 100. The white line is the CVI, the cumulative volume index, and it's set to the NASDAQ. The cool thing about TradingView is you can set the CVI to all US markets, which is pretty cool because then you can benchmark it, say, against the S&P. And we do have divergence here. We had that sell-off while this continued pointing to the upside. So there's still not, the backdrop on the NASDAQ is that they're still not selling it off. The volumes are net positive while the price action dropped. So there's some divergence there to deal with. Seeing a little bit of difference in Bitcoin starting to show up. We could see a bit of a rally. KWeb also, after basing here, it looks like it's trying to turn back around. So we could see some mean reversion today, which already fits into the narrative. This is what we had discussed already on the ES, that we could base down here and then begin working our way back up. Got a lot of pivot points to work through between the daily pivot, some options levels up there, then things like yesterday's close, yesterday's high, getting back into the ADR on the other end, and then the previous week's high. A lot of pivots on the other side of this. So be careful, watch the clock, keep your eye on the news and Treasury with those auctions today, plus just looking for any impact out of US dollar Japan and that BOJ announcement. I'll see y'all tomorrow.